Hello and welcome to the day ahead. It is Wednesday, March 2nd. I'm Andrew Gagan. Well, global markets remain under pressure as the crisis in Ukraine escalates. Wall Street stocks slumped for another session, with financials bearing the brunt of the damage as the crisis deepens and investors' fears grow. The broader financials index posted its biggest daily percentage drop since June 2020. This as a reported 65-kilometre Russian tank convoy makes its way to Kiev, with the Kremlin warning residents to flee the Ukrainian capital and other large cities. In response, the West continues to apply pressure on the Russian economy. Canada's Deputy Prime Minister Chrystia Freeland says the G7 will impose further sanctions in coming days, while Britain has slapped fresh sanctions against the Kremlin, including a ban on ships and new financial measures. Maersk, one of the world's largest shipping lines, has suspended its container ships to and from Russia. Google, meantime, has confirmed it will remove Russian state media from its Google News service in response to the invasion. And Apple has stopped selling all equipment on its online store in Russia. And Beijing overnight has offered to play a role in mediation to end the conflict, with the Chinese foreign minister reportedly speaking to his Ukrainian counterpart. There's China criticisms for its recent silence, saying China deplores the outbreak of conflict between the two nations. The US dollar jumped nearly 1%, Treasury yields dropped to touch to 5-week lows, and the short-term funding stress gauge, the spread between the US 3-month LIBOR and overnight swap rate, touched its lowest level since April last year. The euro was trampled in the overnight session, sliding to its lowest level against the greenback since June 2020. And the ruble also continuing its downward spiral, down close to 7%. The Aussie, relatively steady, finding solace in the distance from the conflict, as high commodity prices help provide a buffer against geopolitical tensions. Meanwhile, the crypto rally continues, with Bitcoin up another 6% to move, the Ether, in fact, rising 5%, also moving above the $3,000 level. This as it's speculated Russians are using cryptocurrency to evade sanctions and move money out of their country. Now, while war plays out in Europe's east, EU nations continue to deal with rising inflation. Germany's January CPI pushing above estimates, harmonised CPI rising to 5.5% year on year, the headline number at 5.1%. Italian headline inflation for the month rising to 5.7%. In the US, February's manufacturing ISM was strong at 58.6, boosted by new orders. Employment fell back, yet remained positive, while prices moderated but remain at very high levels. Ahead today at home, fourth quarter GDP will be released, with a rebound in activity expected given the easing of COVID restrictions. The market is forecasting growth of 3.3%. Strong consumer spending is expected to be offset slightly by weakness in home building. Well, the local market set to track its global peers lower. SPI futures pointing to a near 1% drop at the opening of today's trade. In fact, that's come off. It's currently at 0.7% lower. Oil again the key player to watch. Brent futures setting up 7% to close at their highest level since August 2014. Iron ore has continued its march higher, sitting at a 2-week high, underpinned by improving factory activity data in China, after the latest PMI held above the 50-point mark last month. Spot palladium prices also tracking higher, up around 5%. And traditional safe haven gold remains in firm focus. Gold futures up 2.8% to $1,953 an ounce. Investors' focus has turned to negative real rates and the impact on the broader commodity sector as the unrest in Eastern Europe continues.
We think that the commodity markets, are absolutely going to be increased with this, quarantining of Russia from the world commodity markets. It's most of the, Russian wheat. They're the top gasoline supplier to the U.S. They provide 2/3 of the world's fertilizer. So negative real rates, we think, are the really important thing, and we've seen a jump in inflation just based on this.
Quiet on the equities front here at home. Now reporting season has wrapped up. A number of ex-dividend, though, going today. Macquarie, Telstra, Link Administration, Treasury Wine Estates among them. That is your day ahead for Wednesday. Thanks for watching.